Well, thank you everybody for being here. I'm Scott Sheng, branch manager of Bywise Mortgage, a California mortgage broker, and founder of FindMyWayHome.com. The reason I started Find My Way Home 10 years ago is really to have conversations and to talk about the insider stuff that consumers don't always get to hear. And I run into this situation quite a bit lately where some of these big companies, I'm seeing all of these things where consumers, I feel like they're being taken advantage of. And Sam, you see this all the time. And it seems like it's buyer beware. But I hate that term because I think it's ignorant, because smart companies can always outsmart uninformed consumers. So this is about buyer be aware. And that's what we're trying to do here, is to help you be aware of these things, that if somebody's trying to sell you something, they're not going to tell you the truth. They're going to tell you what they want you to hear in order for you to write them a check and do business with them. So Sam Parker is a friend of mine. He runs a credit restoration company, and the reason I make that distinction is because there's a lot of companies out there that call themselves credit repair companies, and I think 99.9% of them are scams. I'm not in the business, so I can say that without a lot of fallback. Sam's business is a family-run business, and they absolutely care about consumers, like in a crazy way. So I guess let me introduce Sam. Welcome. Good morning, and thanks for being here.
Yeah, absolutely. Thanks so much for having me. I appreciate it. I love the mission that you're on and the passion that you have for educating consumers so that they can make an informed decision and not be taken advantage of. So I'm always happy to participate any way I can, Scott. Thank you.
I love it, and it's great because you give me stuff to talk about. So Sam sends out. So Sam's primary business in the past has been working with mortgage lenders and loan officers like myself to try to help consumers get their credit where they need to be in a short period of time in order to qualify for a better loan. And what that really has trained Sam, what Sam has created here is the complete opposite of every other business model for credit repair out there, because their whole goal is to get you on the hook for $75, $95 a month for as long as they possibly can. And that's their business model. Sam does not operate that way. He's just a straight up legit small business owner looking out for the consumer. And that's all the more reason why all of us entrepreneurs got to get together and try to have a louder voice than what these people that can spend millions and millions of dollars trying to convince consumers that things are other than what they are. So boy, it was 2011 when I started writing about bankruptcy, going through bankruptcy, having foreclosures, short sales. It was right after the crash, and I really dove into that topic deep. And I've been working on this stuff a lot. And now Sam sent out a video the other day about life after bankruptcy. And I think we've had this conversation, but you brought up some really good things. I want to have this conversation again because we're starting to see in the news now, it's not necessarily inflationary, but we're kind of back to a normal market, like a normalized market. And we're not experiencing the inflation now, but in a typical economic cycle, you've got inflation and it's followed by mild recession, and then it's up and down. It's cyclical. And we're starting to see auto loan delinquencies go up. We're seeing credit card delinquencies go up, and we know that we've got student loans that are lingering out there. That's basically just a tsunami of debt that nobody knows what they're going to do with. So Sam published this article, sent out this video about life after bankruptcy, and I wanted to get him on here, pick his brain, share this stuff with you because it's absolutely relevant. And I think the most important, probably the most valuable or the most important piece of this is the life after part, because I think, actually, Sam, why don't you start? Because you really, I like the way that you try to remove the stigma. That's the most important thing.
Well, and that's the unfortunate part of it, is that everybody is so worried about the way that they look to their neighbor, or to their, to strangers. And for some people, that's the reason that they got into this situation where they need to file a bankruptcy, is that they were trying to keep up with people that really, at the end of the day, don't matter, right? Like, it's your family that matters. What's that?
The Joneses?
Yeah, exactly.
The Joneses?
In trouble, and what most people don't know is that the Joneses are about to file a bankruptcy also, because they were trying to keep up with the Smiths. You know what I mean? So the thing about a bankruptcy is that it's a fresh start, and some people need that because their kid got sick and they couldn't keep up with medical bills. Some people need that because their business went under unexpectedly. Some people need that because they made really bad decisions too. And what it all comes down to, I believe, and not to get too philosophical here, but at the end of our days, who's going to be around you? It's your family, right? It's your close friends. And so what I ask people is, how productive of a family member are you being right now? How productive of a community member are you being when you're drowning in debt? What's your marriage like? Because most marriages end in large part due to financial problems, arguments, misunderstandings. Yeah, stress just created by that. So I want to normalize getting back on your feet. And in some cases, that's a bankruptcy. Now, just to kind of go in a little bit more depth for those people that don't have that much experience, there's a Chapter 13 bankruptcy, which is a restructuring of your debt. That's basically if you make too much money to wipe out all your debt. Okay. Then there's a Chapter 7, which is the more common option. And what that is you go into a bankruptcy attorney for anywhere from $1,500 to $2,000. They file some court motions. They include the debt that you owe that are bankruptable, which are non-government backed debts like student loans and tax liens you cannot file bankruptcy on. But besides that, most debt, if the numbers add up or don't add up, then you can file bankruptcy on that. And so usually in a matter of a total of like a 2 to 4 month process, you can go from being drowning in debt and not knowing how you're possibly going to pay your bills or get food in some cases, if it's that extreme, to being basically debt free. Learn your lesson, and we'll go into depth on that, go in more depth on that, but then start over and really be able to focus on the things that are important. It's a get out of jail, not free, but very cheaply option for you. And you can only do it every 7 years. So it's not like you can do it every year or anything like that. And you shouldn't do it every 7 years, but it's there for you for a number of reasons.
Yeah, it's an unbelievably valuable social safety net, and it's incredibly valuable, and it's you can't abuse the system. There's a judge that determines whether or not you're financially insolvent. Right. Actually, I have an interview coming up in a couple of weeks. I have an attorney friend of mine that's getting student loans wiped out. And we'll go into that a little bit in bankruptcy. It's not what you think exactly, but this lady is amazing, and we're going to talk about that. So, yeah, no, you're absolutely right, Sam. I mean, people get, you named a lot of reasons why people can get into bankruptcy. And, the most important thing, I think, is that, crummy things happen to good people all the time. And it's not like you just get hit upside the head with it. Sometimes it's a slow roll. It takes a long time to get you into that situation. You needed a little help here. You stumbled along the way here, kind of charged up your credit cards, couldn't get them paid off. Something else happened. You needed another credit card because you had a family emergency. Next thing you know, you turn around, you got tens of thousands of dollars in debt, and things aren't great. Family life isn't great. And like most things that we fear, the fear is far worse than the reality.
Right. So in this case, because what are you afraid of? Not being drowning in debt, being able to start to save for retirement, being able to teach your kids fiscal responsibility. Like, what is it? Like, the end result is, if treated the way that it should be, is amazing. Just learn your lesson or plan a little bit better for, those worst case scenarios, and then just live a great life. You probably have quite a while to live. Why spend a lot of your great years just digging out from mistakes when there are other options?
And obviously we're not advocating bankruptcy here, but what we're saying is if you get into a situation where bankruptcy is an option, it's a very good and it's a very safe option, and you should not have any emotional reservations about filing bankruptcy. So, okay, Sam, so you built up my courage. I feel great about filing bankruptcy now. I pulled the trigger. I got it done. Now what? Am I just automatically perfect? Not really, right?
No, a number of things. First, you need to rebuild credit. You need to reestablish credit, and you need to learn your lessons. So first and foremost, learn your lessons, because like you said, we're not advocating bankruptcy. It shouldn't be something that somebody has in their life plan of, I'm going to do this and then, hey, I can file bankruptcy. Again, what Scott and I are trying to say is, if you're in this position, either through no fault of your own or through bad decisions, and you're ready to lead a different life, it's there for you. Now, first and foremost, when I say learn your lesson, it means do a budget. Okay, so you need to go through and see what you actually make and what you actually spend, and then make adjustments if necessary. You might say, my gosh, for the life I want to live, even for the basic stuff, I don't make enough money. Okay, well, then you need to make some career choices, either a different job or an additional job, or if you don't like the way that sounds, then you're going to have to cut back on the other side of things, on the spending side. So there has to be a give and take somewhere, and you got to put it on paper. When you put your goals on paper, you're exponentially more likely to achieve those goals. The same thing goes with a budget. You have to have a goal of what you're going to bring in, what you're going to spend, and what's going to be left over. Okay, so that way you don't get back in the same position. You also need to reestablish credit. Once you've wiped out all your credit, you can't do the thing where you go, okay, well, that was scary, I'm just going to do cash the rest of my life, because you're going to need an awful lot of cash. If you're in California, where Scott is, and you want to get, I mean, some of the houses I've seen in California that I see like $1.1 million on, I'm just like, oh my gosh, but
that's a first-time buyer home in California.
Yeah, I mean, that's the reality there. So it just is
stupid.
It is what it is. And unless you're gonna have $1.1 million to buy that house, you're gonna have to borrow from a bank, and a bank is gonna want to see that you can use credit and use it responsibly. So you need to reestablish credit. Now, when I say that, trust me, I will give you plenty of marching orders to go along with it. I'll tell you what credit card to open, how much money to use, how to use it, how often to use it, that sort of thing, because we need to get your brain a little bit different. Credit cards are not money. Credit cards are tools to build your credit. Okay, so you got to reestablish.
I highly encourage, Sam and I did a whole series of videos, and I think we talked a lot about the credit cards. I believe we talked about credit cards and managing that debt and how many credit cards and the balances and things like that. Real quick, just so that you don't get a million calls from all over the country, I would like to think that we could get this much exposure for this message. But real quick, how do you said the right kind of credit cards and using them the right way. Super quick, what does that look like?
So I like to start off with secured credit cards. Okay, they have a safety net built into them, and you're just kind of walking before.
So secured is you send them $500, you get a credit card with a $500 limit.
Here's the one that I like. We have a card that we promote called the Credit Builder Card. The reason that we love it is that it reports to all 3 credit bureaus. It's only $200. You can get up to 2 of them at the same time, so you can really start to build credit quickly.
Wow.
Yeah, and then it reports to credit really quickly too. So where most credit cards can take anywhere from 1 to 3 cycles to report, so up to anywhere from 30 to 90 days to report, this thing is usually on credit in anywhere from 2 to 3 weeks. So we can start establishing credit faster, building credit faster, and then the reason I like these is that they're stepping stones. because what a lot of clients do after bankruptcy is they set themselves up to be taken advantage of because, you know, they're desperate. Who will give me credit? With this, you don't need to be desperate. You go out and you get a $200 credit card with you know, not a ridiculous interest rate like you're going to get hit with by the regular credit card companies or credit building companies when you're trying to get what's called an unsecured card, which means you didn't put any money up. So for just $200, you can get just a much better, less predatory deal where now you use this $200 card as a stepping stone. You make sure you're making your payments on time because there are still payments with secured cards, okay? And then you make the stepping stone. So now I have a 650, so now I have a 680. Oh, I get it. I make these payments every single month. This is easy. Okay, cool. Then let's talk to a more traditional bank at that point where you can get that credit card at 8%, have a $1,000 limit, and now you're learning your lessons and rebuilding credit, and you're using these cards, you know, with a true game plan in mind strategically, instead of just, oh, I have $1,000 on this, that means I can buy $900 worth of stuff I don't need. You know, it's just a totally different mindset that needs to be established when dealing with credit.
So that's a little bit of moving forward. Let's take a step back, though, because one of the things that I see over and over again when we're working with people that had bankruptcies and things like that, two things I see very, very common. The first thing is all of your creditors, while you're falling behind, they love to report the lates. They're super quick to report the lates and all the derogatory stuff. But sometimes after you file the bankruptcy and they know they're not going to get paid, they're not always reporting accurately. Yeah. So there's stuff, there's just junk on your credit report that shouldn't be there. So you're encouraging people, well, the first, not in addition to building new credit, you're also kind of going back and looking for some landmines and trying to clean up your old credit report as well too. What does that look like?
You really have to. Otherwise, as you're trying to build credit, you're going to be being judged on basically like a pre-bankruptcy credit report, and I'll explain, okay? So
inaccuracies.
Yeah, exactly. So once you file a bankruptcy, the dollar amount of the debt that you owed should be zeroed out, right? Sometimes that doesn't happen, but most of the time it does. Right. Then there's going to be a note that says account included in bankruptcy. Then there's going to be something that consumers never see, and that's called an MOP rating system. Lenders will see it on their credit reports if they're set up to from their credit vendor. And I have a whole video on the MOP rating that I can provide also. But anyway, it's this kind of secret rating system that goes 0 through 9. 0 means it's unrated, an item is unrated or not impacting the credit score. 1 means that it's on time. 2 means it's 30 days late. 3 means 60 days late. Up to, you know, a 7 is a bankruptcy. An 8 is a repossession or foreclosure. And then a 9 is bad debt, charge off, collection, profit and loss, things like that you would file a bankruptcy on, right? So what happens is that the wording and everything to the untrained eye looks fine. $0 balance, account included in bankruptcy, but then you see over there it's a 9 rated account still, which means that even though dollar amount wise, yeah, you don't have to pay anybody any money right now, but credit wise, because of that one little tiny inaccuracy that's not even present on a consumer report for a regular person to see, you're still basically being scored as if that item was an unpaid negative debt, hurting you as much as it ever has. So what you have to do is either go through there yourself or have a professional like myself help you out. And what we would want to do is get all those bankruptcy items either removed, updated to an unrated status, or at the very least updated to reflect the proper 7 MOP rating as opposed to 9.
Sam, is my credit guy working with Consumers Direct now?
Yeah, absolutely. So we've always had our doors open to consumers. It's just that the mortgage industry and the mortgage professional luckily has seen what we've built and appreciated it so much that percentage-wise, we were probably 95% off of, you know, referrals from the mortgage industry. And then, you know, we have hundreds of clients that come from the consumer, but we don't fight the fight online for them with ad spend like the big, kind of boiler room companies. And so we do lose consumers to them just because we're not willing to outshout them online.
Right. Okay, good. No, that's super valuable. Yeah, because from my perspective as a lender, or as a loan officer, that number that you're talking about, that MOP rating, that goes directly into the underwriting system. So right. What I used to see, and actually how we ended up helping thousands and thousands of people, is because untrained loan officers, inexperienced loan officers would get this. They couldn't get it approved. They didn't know what they were looking at, and they were giving consumers the wrong answer based off of misinformation because of a lack of experience. So if you try to get one of these approved and you send it to an automated underwriting approval and that 9 is sitting there, that could throw off your entire approval, even though you're looking at the credit report. It's really, really important that you work with somebody or you have somebody for that second opinion. So going back, reviewing your credit report, looking for those things, they should probably. Now, is there any way a consumer can get their MOP ratings?
Really just to work with an educated lender. And like you said, there are some companies out there that are, they're advertising online, they're advertising at the Super Bowl, they're built like a rocket, but they have no customer service at all, no experience to draw on. So when you're talking to one of these companies that you're maybe clicking an app on, you're speaking to somebody who was literally a waiter last week, and I'm not I'm just saying literally they were a waiter last week. And so you can't ask them to dissect a credit report when you compare it to somebody like Scott here, and I'm not just trying to promote you, I'm just using you as a shining example of somebody who has decades in the industry, somebody who has a passion for their craft and for helping people, and who knows things like the MOP rating system, which sound boring and foreign to us, but they're so important in the biggest purchase you're ever going to make.
Yeah, no, 100%. Well, let me real quick. Let's talk about my favorite subject, which is buying a home after bankruptcy. Yeah. And this is called life after bankruptcy, and this is what I want to be able to show people, is that it really isn't that bad. You think bankruptcy? Well, I think you would imagine buying a home, probably the largest investment you're going to make in your life. You're probably borrowing at the bare minimum tens of thousands, more realistically hundreds of thousands of dollars, and you just filed bankruptcy. If you do all of the best practices that Sam is talking about here, go back, you clean up your old credit report, you start building new credit. Real quick, Sam, what is the normal timeline you're seeing? Let's just talk credit scores. Let's make it super simple. Let's talk credit scores. How quickly are you seeing credit scores improve after a bankruptcy?
So I will say that our clients who have filed bankruptcy, especially a Chapter 7 or a fully completed 13, because a 13 can be an ongoing process, which complicates it a little bit. We can still work with a client during a 13, but anyway, a finalized bankruptcy statistically are our home runs. We see huge increases, and I have to be careful as an ethical credit restoration person. All results are not typical and blah, blah, blah. But anyway, those are the ones where it's not uncommon to see the 70, 80, even 100-point increases sometimes in as little as 1 to 2 months, because once you reestablish credit and introduce a positive trade line or trade lines where there were none, and remove usually double-digit negative items, moving those to either deleting them or updating them to the correct status, it's going to have a tidal wave type reaction to your credit score. And so people who have filed bankruptcy, as long as we look through there, and especially if those inaccurate MOP ratings are present, which we'll do that free review before we start, they can definitely expect a nice healthy boost in that time frame, as long as they're not falling back into old habits. No new late pays, no new collections, that sort of thing. But they can be very optimistic about what could happen if they're working with a good credit repair company. So usually 2 to 4 months in process, something like that for a post BK client. And honestly, if they're paying a lot of attention to us, doing the things that they need to, we can really keep that more towards that 2-month total process, because it's plain and simple. There's no debt settlement. There's no pay for deletions that need to be done. It's plain and simple. Clean up the bankruptcy items, establish some new positive trade lines. Do you understand what you need to do going forward? We've done the budgeting with them. They've had their credit coach work with them, and should be a nice new life for them financially.
Yeah, so that's the great thing about this bankruptcy, and it's not just the bankruptcy. It's surrounding yourself with people that are going to help you get to the next point. So the credit score part, once you file bankruptcy, you can get your credit score back up. Now, buying a home is has to do with more than just the credit score. But the most important thing is when you hit a bankruptcy, there's a waiting period. So anytime you have a significant financial hardship, whether it's just lates or something major, like a bankruptcy, there's a waiting period before you can buy again. So during the time that you file the bankruptcy, you're working on your budget, like Sam's talking about. You're cleaning up your credit. You're working on moving forward. You're getting yourself into that position. How long do you have to wait in order to buy? You might be shocked. FHA and VA is 24 months. 24 months. Chances are, if you ended up in a position where you had to file bankruptcy, you're going to need some breathing room anyhow to kind of get back on your feet. Your life is upturned a little bit as you're going through this. But 24 months is nothing, Sam. Getting your down payment, which is almost nothing, no down payment for VA, 3.5% for FHA. Now, if you're buying out in a more rural type area and you're eligible for USDA, 100% financing, that's only a 36-month wait. That's 3 years. The longest wait is going to be conventional Fannie Mae, Freddie Mac. That's going to be 4 years from the discharge of the bankruptcy, or from the discharge of the Chapter 7 bankruptcy. These are not long waiting periods. What I usually recommend to people is baby step that thing. Hit your FHA in 24 months. Pay down that thing. Earn some equity. Take that equity out, sell it, turn it into a rental, and then buy your dream home with conventional, maybe if it's above the FHA loan limit for the area that you're in. A lot of different ways to do this, but man, it is definitely not the end of the line after you file a bankruptcy. So, I hope that we were successful in helping consumers be aware of the fact that bankruptcy is not a scary thing if you find yourself in that position. However you got there, surround yourself with good people, get back on your feet, get back out there and get going again, and you're going to be right on track in absolutely no time. Credit scores will recover right away. But don't, I guess this is the important thing, is because when those credit scores go up, you start getting credit card offers like crazy as soon as you file bankruptcy, right, Sam?
You do. And be selective, but at the same time, on the flip side of that, just because Scott said 2 years, please do not wait for 22 months to start, getting ready. Like, you want to start rebuilding credit now, but you just need to do it a way that you have never done before, probably, which is to be very well thought out, very strategic. That you have tons of free information available to you through Scott and through my credit guy, and just be very deliberate about how you're going to live financially from now on.
Cool. Could you send me, I'm going to put all your contact information in here so that people can reach out to you. You also said you had like an MOP video or something. We can throw that in there as well. But I want to thank you for being here again, taking time out of your day. It's super, super valuable. I love the way that you share. I love the way that you run your business, and I love the way that you're a consumer advocate. And I think that's probably why we're such good friends. So thanks for being here, Sam. I really appreciate it. And it's not going to be long before we do this again, I'm sure.
It's been a pleasure, man. Thank you so much. And anytime. Have a good one.
Thank you, buddy. All right. Bye-bye.